Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first, I will be focusing on the technical aspect of this market. Then I will go and analyze what the order flow, so the commitment of traders, so essentially what the big players and the biggest institutions in the market are doing and how they're shifting their positioning. And obviously we will be analyzing the data precisely for gold. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment we have a market which just tested and rejected to the upside a quite strong historical support and demand area. From here, in fact, all these previous rejections to the downside were created every single time that the market tested this zone. It got rejected to the downside quite aggressively. Now we have just seen a break above the level. So all this previous resistance is now turned support here. The market just tested the level as previous resistance turned support and now started rejecting it to the upside. So from a monthly standpoint, everything seems quite bullish. The market is rejecting this level to the upside aggressively, and in a situation like this, more bullish price action could be expected. However, it is also important to keep in mind that when it comes to the trend of this market, when you have an ideal uptrend, what you would like to see is not the market just go in a straight line. You would like to see along the way a series of impulses and corrections. Now, the last move was an impulse to the upside, so the next logical step would be to first see a correction and then the continuation to the upside. Essentially, first for the creation of a higher low, so a low that is higher than the previous one that is here, and then for the creation of a higher high, so a high that is higher than the previous one. So from a monthly standpoint, everything is quite bullish, at least for now. However, we have to keep in mind that there is the possibility to see first a correction and then the move higher. Dropping down on the weekly time frame, what do we see? Now here on the weekly, things already start to get quite clear because what we can see is that the market is currently trapped in this range. We have the top of the range here and we have the bottom of the range here. Already twice the market has rejected the top of this range and also the bottom of the range is currently getting rejected as I am speaking. So on the weekly, the situation starts to get a lot clearer, with the market clearly being in between these two levels. So until the market will remain in between this resistance and support, so between the high of the range and the low of the range, we could expect to see more potential horizontal price action being developed. Dropping down on the daily time frame, what do we see? Now, from a daily standpoint, this is where things start getting quite interesting. In fact, what we can notice is that at the moment the market is trying to break above this horizontal level of structure from a daily standpoint. This level was already acting as support here, preceding all these rejections to the upside. Then the market broke below the zone. And what we know is that when we have a level of structure, especially a level of structure that has been tested multiple times, so is very strong support, once that support gets broken to the downside, all the previous support becomes resistance. So at that point, you expect the market to respect the level as resistance, which is exactly what the market was doing all across this area. However, now it seems like the market is trying to break again above the zone. Now, if that will be the case, at that point, what we could expect once again is for the area to be turned support and the market to reject that level to the upside. Now, if we combine this with what we already know, so that on the weekly time frame, the market is in a range and the last test was of the bottom of the range and the next logical test would be of the high of the range, this means that if we get a break above this level on the retest of this previous daily resistance, which at that point would be turned support, This is where we have quite good probability of seeing some institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from the support level and into the weekly resistance, which is essentially the high of the range that we have previously identified on the weekly time frame. Now, what do I mean when I say institutional longing? Well, let's go and see what we have when it comes to the commitment of traders. So what hedge funds, institutions, and the big players in the market are doing precisely for gold. Now, what we can see here is that in the long run, we have seen a massive increase of the net positions. We went from having 131.1k net positions all the way up to 233.9k net positions. So essentially, institutions have been moving aggressively to the bullish side for gold, therefore making it stronger. And we can see in fact how now they have reached 276.7k longs compared to only 42.8k shorts, therefore making gold quite strong from an institutional perspective. So all this longing is contributing to the increased strength of gold. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. Well, here on the daily time frame, as we were saying, if the market will successfully break above this level, all this previous resistance would be turned support. So if we get this break and retest, what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, if the market successfully breaks and retests this level, at that point, what I would expect is that if this market would shift from an intraday bearish market to an intraday bullish market, at that point, a rejection to the upside definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it.
If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.